talk about the stock market and go into a little bit, uh, go into more detail about the players involved in the stock market. First off, anything that is bought and sold has a market. Um, and any type of market is made up of buyers and sellers. And in our case, our market is made up of buyers of stock and sellers of stock, hence the stock market. Okay? Buying and selling of stock is referred to as stock trading or trading. And additionally, buyers and sellers need a place to buy and sell. And in our case, this place is referred to as the stock exchange. There are several stock exchanges around the United States and around the world. However, the one that you should be most familiar with is the New York Stock Exchange. Uh, all right, so brokers, just like a real estate agent, is an intermediary between buyers and sellers of homes. A stockbroker is an intermediary between buyers and sellers of stock. And also, like a real estate agent, a stockbroker charges commissions for completing any type of transaction. Um, Stockbrokers get fees for selling, and they get fees for buying. Stockbrokers, they come in a couple of forms. They come in they're full service brokers, it's discount brokers, and online brokers. And the major difference between these type of brokers is the level of interactivity between the broker and the investor. And we'll talk about that. So full service brokers, they pretty much can provide pretty much everything that a client needs. They provide financial advising, provide financial planning, provide investment advice, company research, in addition to purchasing and selling stock for the clients. A couple of examples of full service brokers would be Charles Schwab, Merrill Lynch, Morgan Stanley, UBS. And full service brokers usually charge higher commission fees per trade because they're providing you with a suite of services. Discount brokers merely they just facilitate the transaction or trade for you. Um, Basically, you, the investor, will call in the trade and say, "Hey, I need to sell a certain stock," and they pretty much execute the trade for you. The discount brokers, they're not going to do what the full service brokers do. They'll provide you with little investment advice. Their main role is just to facilitate the transactions for you. And some examples of discount brokers would be TD Waterhouse, Fidelity Brokerage Services, and the discount brokers they charge lower commission fees per trade than full service brokers because they're not providing the same level of service. Online brokers, internet brokers provide investors a way to initiate and execute trades online electronically. And this has been the big thing with the advent of the internet, with the explosion of the internet, information and stock market investing has really opened up to the average Joe. In the 60s, 70s, and 80s, when the internet wasn't at its peak, the only people that were really involved in stock market investing were wealthy individuals, people who had access to the full service brokers to perform research and to execute trades. They were able to do that. Online brokers were non-existent, so therefore you had the average Joe not being able to invest in the stock market. But now, with the advent of the internet, that has totally changed. Now the average Joe can really get involved um, in um, trading stock, and due to this phenomenon, a lot of the full service brokerages uh, to try to save a little bit of market share, they've opened up internet brokerage segments as part of their businesses. So now you're seeing a lot of the traditionally full service and discount brokers. You now see them allowing their clients to perform and facilitate trades online, um, because of this internet phenomenon. And some examples of online brokerages are Ameritrade, Scottrade, E-Trade, ShareBuilder. And these brokers charge the lowest commission fees because they're pretty much um, they're not providing you with any research. They have online research material, but as far as you talking to a person to get investment advice, they're not providing you with that level of service. Deciding on which type of broker you use depends on you. Um, Most brokers, they require a minimum balance to open an account. Some brokers may require you to maintain a certain balance. It just depends on the brokerage that you choose. And let's go into a little detail about direct investment plans. Some larger and more established corporations have direct investment plans. Direct investment plans are simply buying shares of a particular corporation directly uh, from the corporation, and they essentially eliminate the middleman, the broker, and their commissions. And you may still, I mean, even though they say that you're eliminating the middleman, there are still um, companies that there's transfer agents that manage these direct investment plans. So you still technically going through a middleman. You just do not have um, the the trading fees because you're setting up a direct investment plan. And most companies who have a direct investment plan, they require a minimum investment or a minimum ongoing investment, or an automatic investment plan. And if you want to find out which companies have direct investment plans, you just need to visit the websites of companies that you are interested in investing in, and just go to the investor relations section, and you'll be able to find out who has uh, direct investment plans.